So have you looked at the feasibility of getting 5 flats in this building without having to rely on a certificate of lawful use? Because I'm not sure you'd get that.
Hi Mark, welcome to Property Elevator.
Thank you very much.
So where have you come from today?
I am coming from London, so not too far from here.
Great. And is that where the deal is that you've brought as well?
Actually, yeah, this deal is actually in South Kensington, so a prime piece of London, and we are talking about a building, 6 floors.
Excellent. Tell me then, how much investment are you looking for from the angels?
So this is a pretty big project. Obviously, South Kensington comes at a premium. The overall investment will be about £8 million.
And so what would it mean to you then if you were to get the funding today from one or maybe a few of the angels?
Obviously, the experience is the number one key, number one sort of factor which I'm truly looking for. Obviously, given it's a very big project, the fund needed is crucial. But ideally, I'd be looking at working with 2 of the angel investors for their experience, and hopefully, this is one of many deals to come in the future.
Fantastic. Well, good luck. My fingers are crossed for you, and I will chat to you when you get out.
Amazing. Thank you so much.
Thanks, Mark.
So we have Mark Camilleri coming to see us. He's got a very exciting deal in Kensington where he's looking to convert a house into 5 flats. He's after £8 million from us with a 26% return.
It's got to be one of the biggest
and a
asks yet.
50-50 split.
Okay.
Well, he's presented his pitch deck in a brown envelope. There's nothing inside it apart from the pitch deck.
That's unfortunate.
Not a couple of million sweat equity.
There's nothing
other than asking for £8 million.
Well, let's see whether the deal is worth it.
Let's.
My name is Mark. I'm a French-English citizen. I live in London, worked in tech for about 10 years, and I've decided to spend my time and bandwidth in real estate. I'm a small property investor, got a couple of properties in London, service accommodation. I'm completing on a couple of properties in Liverpool, which are basically HMOs. And the project today that I'll be talking about is a building in South Kensington, so SW7, so a prime piece of building of property in the heart of South Kensington. And this is an off-market deal. So through a contact, I got to know about this opportunity. The guide price is £5 million. At a high level, the project is a conversion, more like we're going to basically lay out the property into 5 premium flats. As you can see in slide number 4, the idea is to convert the first floor into the low ground floor into a 3-bedroom flat. The second flat at the raised ground floor will become a 2-bedroom flat. Same for flat 3 on the first floor, and on the second floor, again, another 2-bedroom flat, and finally a duplex on the third and fourth floor. So just to give you a bit of an overview of the numbers, as mentioned, the guide price is £5 million. The total development costs, we're looking about £2.8 million. I've taken a price per square foot of £2,200 compared to a...
Per square foot?
Sorry. The total development cost, so the price per square foot for building it, is about £375 plus contingency, so we're bringing it about £400. Obviously, we want it to be very premium. The resale price is currently, I've put it at £2,200 per square foot. Realistically, we could achieve more, given the comparables I've shared in slide, I believe, 5 and 6. As you can see, most of the properties have sold at around £2,400 per square foot, which is about 10-15% over what I'm projecting. I've lived in the neighbourhood for quite a while, so I know that part of London very well. It's extremely sought after. I'm assuming most of you know it pretty well, so I'm not going to go into too many details as to how great of a location it is, but it's 5-10 minutes away from Gloucester Road Station and South Kensington Station, so that allows for an easy commute. What I'm looking for, I guess this is the reason why I'm here, is for an investment of £8 million, give or take. This is the guide price plus development costs plus additional fees, including professional fees, and the gross development value. So ultimately, what I'm looking for to achieve is £11 million, give or take, on the resale price. So the profit would be about 25-26% on capital implemented, so on cash invested, and that would be more specifically a profit of £2,755,000, so basically £2.8 million. The project should take about realistically 18 months. The reason why I believe, even though we don't have pre-app, is given that the property has already been rented out for 10 years as 5 different flats, we can get a statutory declaration, which should hopefully ease the application process and get us through the door. So this is a high-level project, and I'm very happy to take any questions.
So great to see you, Mark. Ambitious. I like to see people think big on this show. It must be one of the biggest money asks we've had in the last couple of series, £8 million. Nicholas, what are your thoughts?
Well, small change for me, Ranjan. I think
Back at the sofa, yeah?
Yeah, it's probably down here somewhere. Oh, it's not in the brown envelope,
It's
though,
not in the brown
unfortunately.
envelope,
No. Do you take cash in brown envelopes?
I know many people in London who do.
Oh, do you? Okay.
But unfortunately, I'm not one of those.
Hopefully some builders that take it. And
Absolutely,
do cheap
builders
builds for
are
us,
great
yeah.
for that. Yeah.
Okay.
He seems to like brown, doesn't he? He's got
Yeah.
brown jumpers, brown envelopes,
Brown shoes.
brown shoes.
There you go. Can't say I'm impartial to a brown shoe myself. I just want to get straight to the numbers you've presented there. 25% ROI, that's not per annum, of course, is it? So actually that annualizes down to about 16%.
Yeah.
So I think straight off the bat, we'd need to be talking development finance to bring the cash input down. Are you open to taking development finance on it?
It is an option. Obviously, the profitability goes significantly down depending on what are the options. So obviously, it'd be great to understand if any of you have some experience. Obviously, experience you do have, but some good opportunities of financing it at a good price.
Are you struggling to find your next commercial to residential conversion project? Well, over the next 2 years, virtually every UK bank branch will close. Banks are fabulous buildings in prime locations, and thanks to permitted development rights, they're really easy to convert to alternative uses under a light touch planning regime. My team have put together a list of over 500 UK bank branches which are poised for imminent closure. And for a limited period only, you can download this list absolutely free. Your next commercial property project is on this list, so download it now and enjoy the rest of the video.
Obviously, property is a people's game, and I think for any of us to joint venture on something of this size, it would be important for us to know about you and your experience. What have you done in the past?
Clearly, this project is bigger than anything I've ever done. So off the bat, this would be my first big sort of conversion into several flats. I currently have 2 properties in central London that I've turned into service accommodation. So I've renovated them, I project managed them. I am currently competing on 2 properties in Liverpool as HMOs, they're 6-7 bedroom HMOs, ideally for young professionals. So basically that's the angle. And this would be ultimately the first project I would be doing at this scale.
Sorry, can I just jump in? Have you got money tied up in those projects? Because you're not at the moment offering to put any of your own cash into this deal. So what do your assets and your liabilities look like to be able to offer some kind of downside mitigation or downside hurt pain for the upside gain that you're looking for from us on this project?
So I do have money invested. So the 2 properties in London are my own money. So obviously, so we're talking about 70% equity, 30% equity in them. So they're raised about, the properties are valued about 1.1 million. The properties in Liverpool, those obviously are smaller, small change, but they are my own deposit. And I would be willing to put 50 to 100,000 just to show that I've got some skin in the game.
So if we bring 8 million, we bring the experience, and you bring £50,000.
So yes, absolutely.
I think this is a ultra high net worth family home investment, maybe turn it into a beautiful house as a bolt hole from another country. It's a capital growth investment, I believe. It's not one for an investor, because by the time you get down to 16%, you start taking development finance, which any investor is going to want to do. The margins get reduced further. It's just far too much risk for far too much money. I could do 10 deals for this money and be making a 35% margin on each of those and do several of those concurrently. So I'm afraid it's not one for me. Hope you get lucky with one of the other guys.
I'm going to echo that and declare that I'm also out. I don't think the margins are there, and I 100% agree with you.
That's the least I've ever heard Nick speak.
Well, have you got planning or any indication that you'll get planning for the 5 flats that you've proposed?
So I've spoken to a few people who are architects and somebody who works on these kinds of projects, and he said it would be very, very likely, which is why he mentioned the stat deck, the statutory declaration regarding that this property has been operated as a rental property with 5 properties in it. So currently there were tenants in them.
Yes,
And
but I don't know who's giving you that advice, but a statutory declaration is just exactly what it says from the previous owner. That is not a certificate of lawful use for its current usage. And that would need a full application to the council with a huge amount of documentary evidence. And I'm just looking at the layouts of the existing floors, and it's a typical house of this era. It's a little bit higgledy-piggledy, and the flats aren't exactly self-contained. So you've got bathrooms on half landings on mezzanine floors, which are sort of shared by other floors. So because of that lack of self-containment, which is very typical in how people have configured these houses long time ago for rental, but it would be exceptionally hard to get a certificate of lawful use for this as 5 self-contained flats, because they'd turn around and say they're not self-contained. You've got bathrooms which are on half landings, which are not self-contained to any flat. And plus there's all the documentary evidence that you have to provide. That's a massive issue. So then if you went for full planning permission, we have to look at, like with the lower ground floor, that it wouldn't pass daylight assessment. You're looking for a big flat there with only windows to the rear. So have you looked at the feasibility of getting 5 flats in this building without having to rely on a certificate of lawful use? Because I'm not sure you'd get that.
Yeah, so given the time, this opportunity was shared to me quite recently, and given that also the deadline is actually quite soon before the bidding process starts, I wasn't able to do as much sort of due diligence as possible. I have spoken to a couple of people who have done these projects, and given the location of the property, given basically his experience, he said it would be very likely. I'm aware that you all have more experience than I do, and I'm aware how difficult it can be to get application. But given it's SW7, given that there are already people who have lived in there as normal tenants.
How long?
Over 10 years.
Over 10 years. And you've got proof of that as well?
Yes, there is proof for that. The owner would be happy to share sort of rental leases about that, yeah.
So just going on to onto what Ranjan was saying, and I take the point around the bathrooms, but actually if it's been operated as 5 flats for kind of 10 years or more, actually that's an insurable risk. So you would be able to get insurance in the event that you didn't get, so to be able to operate it or sell it as flats. So that kind of deals with that point.
I think the issue there is that even if you did get a certificate of lawful use for its existing use, because you've got half landings where the bathrooms are, how would you reconfigure that?
You've also got the entranceway and you're separate to different flats. There's obviously it's more complicated than that, and I get it. I think the point is though that if something has been used in a certain way for a long period of time, and 10 years or more is a long period of time, you can get insurance for that if you want to continue a property using it in that way. It looks like, I mean, it sits beautifully. It's a great location, great property. I kind of echo what Nicholas is saying, insofar as it's an awful lot of money to put into one scheme for a limited return, which is high risk, particularly in the current economic climate. So it's not one that I'll be investing in, and I wish you all the best for the future. But I think you presented yourself and the project very well.
Thank you. Thank you very much.
Paul?
Yeah, I think the difficulty with this one is, as a cash development, it just works if all the boxes are ticked. If you get the planning quickly, etc., etc., etc. Nicholas made a good point. When you add in, in my experience, no one spends 8 million quid cash to do an 11 million GDV development. You need to get finance for that because we want our money to go further. But when you add in the finance costs, it doesn't really work, especially when what Scott said was quite right. This market is relatively volatile at the moment. So you might see a softening in prices, and that brings down the returns as well. And then you add to that the fact that we're splitting the returns in half, and it might take a lot longer than you think because planning is very unpredictable. So that for those reasons, I think it's going to be difficult to stack up, and it's not for me.
You could buy the Sydney Opera House for 8 million, couldn't you, Paul?
I don't think you could buy it.
in Sydney,
have you seen stuff of this value over there?
Nicholas, I think to be honest with you, in Sydney right now, some of the parts of Sydney,
Sydney's more
you
expensive
might
than
get a
London.
vegetable patch.
Any more questions on
Maybe
this
I should go to
deal, or
London.
shall we declare our offers?
I already have.
I already have.
I don't think the planning is feasible on this one. I've done quite a lot of central London stuff, and personally, I have moved outside the M25.
Did I hit? Hang on, did I hear that right?
Yeah,
You've moved outside the M25
for exactly the reasons.
Did you get a nosebleed?
You've been listening to John, just in case.
He's gone to Watford.
For exactly the reasons that Nick said. You can make your money go far further, and you can turn it far quicker. And the other problem with London, which hasn't been covered yet, is the exit route. The exit route, you always need to have multiple exits, not just sale, but rental. But the exit route through rental in London is exceptionally poor. The yields are poor, and you will end up leaving a ton of cash in if you have to exit through that route.
Great point.
So those are what were
It's a
key
good point.
reasons
You're only
why
going to
I've-
finance that at 50% as an exit.
Exactly,
Yeah.
if that. But it's commendable that you found this off market. That's a very, very good talent, and use that talent just to find more easier to bite off and chew deals that you can be in and out of quickly with multiple exit routes would be my advice.
We'll potentially package this up and sell it as a package deal. 2% on 5 million quid. It's not a bad little fee to keep your business going for now.
I've got a good pipeline, so hopefully,
Excellent.
if the stars align again, I'll be able to share some more. Well,
Good
thank
luck.
you, and again, thank you all for your opinions. It's I agree with you. It was ambitious, but sometimes reach for the stars and you land.
Absolutely.
On the moon, so,
Yeah, of course.
this is hopefully what I'll do. Thank you.
So 8 million quid. Got to admire the guy for thinking big.
Yeah.
Yeah, 50 grand down.
50 grand down, yes.
That's a push.
To be fair, look, even if this was offered to me as a deal sourcing with a 2% finder's
It
fee,
still wouldn't
I
work.
wouldn't take it.
No.
Yeah.
I mean, I assume that's the reason he was asking for 8 million, because when you add in the finance, it's not worth doing.
Yes. But I think the thing that a lot of people miss is that when a property's been on sale for a long, long time, they're still hung up about giving the vendor what they want. It's about using the fact that it's been on the market for a long time, it's difficult to shift, and going back with what it's worth it for you to actually buy it.
This is
Not
off
what the
market
vendors-
though, isn't it?
It's off market,
He
so it's
said
not
it's
on the market.
He
Look,
said it's
I've got a
been,
saying.
they've been trying to shift it for some time.
Yeah, but he
Ranjan,
also did
I've
say
got a
it's off
saying,
market.
which is, in any climate, in any market, in any environment, if you buy well, you can sell well.
Yes.
You make
At
your money on
5
buying,
million-
don't you?
And at £5 million, I don't think you're buying well.
Is that
No.
your saying, Scott?
You buy well, you can sell well.
Well, John has 8 million quid in his back pocket. Let's see what he has to say about this deal.
Mark, you've got some balls. You've come into the show wanting £8 million. Now, there's one or two angels, and I'm thinking of Ranjan in particular here, and maybe Scott, who potentially could have funded a deal this side. I'm sorry, Hayley, if you think I'm being mean to you, but that's the nature of the show. And Paul and Nicholas. But it's got to be a hell of a deal to invest £8 million. And this deal, for me, wasn't good enough. I could have funded it, but I wouldn't have funded it either. And I think the Angels made the right decision on this occasion, even Ranjan.
Mark, how did you enjoy the experience in the room today?
It was a great experience. I got some great feedback, some great insights. I absolutely agree with them on some of the bottlenecks I might encounter. I was aware of them. But then again, it's still a great property, and who knows, maybe I'll find some other investors for this deal.
The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street, we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.